Very good evening to one and all. We welcome you to this wonderful webinar on a couple of interesting decisions which have been provided by High Courts. And we have been very fortunate enough that we have Raghuraman sir, who is actually a family to CTC. And he has been instrumental in some of these decisions which we are going to discuss today. So he was the lead counsel arguing in especially two important matters that we are going to touch upon today. One was the Goa University by the Bombay High Court, and one was Rohan Corporation again by Karnataka High Court. These decisions have actually laid down a foundation or principles on how the interpretation is going to flow as far as the GST law is concerned. So, without actually taking much of the time, I would straight away request Yash to introduce Raghu sir, and we can proceed thereafter on this.
Good evening, everyone. It is my pleasure to introduce Raghuraman sir, though he doesn't require any introduction, but for the benefit of everyone, I'll introduce him. Raghuraman sir is a designated senior advocate. He is a chartered accountant, cost accountant, and company secretary with an illustrious academic record, which includes first rank in BCom, 38th rank in Inter CA, 24th rank in CA Final, second rank in ICWA Inter, and 25th rank in ICWA Final. That's a super meritorious record, sir. Raghuraman sir's areas of specialization includes taxation, FEMA, and other allied subjects. He has been practicing for over 3 decades before the Supreme Court, High Court, and tribunals. He has addressed large number of seminars and published several papers in national magazines on GST, excise, customs, service tax, FEMA. He was a member of Indirect Tax Committee of ICI New Delhi during 2014-15. Sir has authored various books titled Landmark International VAT Decisions and its relevance to Indian GST, which is published by International Publishing House Walter Kluwer. GST and Indirect Taxes Demystified, which is published by Commercial Law Publishers. With this brief introduction, I'll request all of you to kindly join me in welcoming Raghuraman sir. Thank you so much, Raghuraman sir, for taking out time from your busy schedule and attending and coming at this forum to address our members. Thank you, sir, and over to you.
Sir, before you start, sir, just one announcement for the participants. Whosoever has questions, they can put it in the chat box. Sir, whenever you are comfortable, either after every decision or at the end, I will just moderate the questions to you, and sir, you can address them that way, sir. Sir, over to you.
Thank the CTC for inviting me to share thoughts on some decisions which are of tremendous importance to GST law, the development of GST law in the last 2 or 3 months. We have had a flow of very, very important decisions which have come, some of which we will discuss during the course of this session. One of the most important decisions, and which I was fortunate to argue before the Bombay High Court, was the Goa University case, which has laid down certain fundamentals of the. I'm thankful to the judges for accepting what my view of GST is, and I have been advocating this in so many seminars. I was lucky enough that we had a very receptive bench which looked at the law in a very dispassionate way. The case has been running from service tax days, but this was concerning GST, where, as you know, universities collect a lot of fees from colleges and students, both. From the colleges, they collect the fees, an affiliation is done. Affiliation fees collected. And from the students, several fees are collected, starting from examination fee, convocation fee, migration fee, sometimes even the universities run the postgraduate courses. So directly they run. However, you see the mischief that has been done is to bring through circulars. This is a very unfortunate development in indirect taxes, which has been going on now for decades. Taxation through circulars. 2021 circular, you had a circular which said accreditation of colleges will invite GST. Followed up with a direct circular in 2024, which said affiliation fees is not a service which is exempted from taxation, and therefore it should be bought tax, resulting in huge demands for these kind of fees across the country. It is not restricted to Bombay alone. We have in Karnataka, Tamil Nadu, uh, Andhra, everywhere. A huge amount of GST is being demanded. So what we did was we approached it in this manner. We said on first principles we will argue this matter, as also on the exemption notification. Many people know that an exemption has been given to educational institutions, but the department views educational institutions as excluding universities. Only colleges are covered. This is their view. So we thought so. And there's another aspect of the matter in that today the exemption is there, tomorrow it can be removed. What happens? So we said only what we presented before the Honorable High Court was this, that if you look at the charging section in 9, read it with section 7, we require two things for a supply to be brought to tax. Two things. The supply should be for consideration. The supply should be in the course of furtherance of business. Two, if I don't satisfy any one of these tests, I am out of the GST. I'm not there at all. First, we took up consideration. When I say I render a service for consideration, it necessarily would mean that I have a contractual dealing with the other party. If you look at from service tax regime, we trace the entire history to show how the department always understood that the term consideration, even though you have a definition in 2 bracket 31 in the GST law, the term consideration means that you should have a contractual arrangement with the parties. There is a difference between contractual agreements and statutory functions. An university, by its statute, every university, if you take Mumbai University, it will have its statute. By its statute, every university has to render certain, it is duty bound to render certain acts. I won't say services, certain acts. One such act is affiliating colleges. Its main objective is to ensure that education spreads throughout the states. That is it. That is the objective of setting up a university. They have a duty as differentiated from doing something for consideration. I have to do the duty. I have to affiliate colleges. I have to ensure education is done. So we relied on this section 11, section 12 decision of the Income Tax Act, Ahmedabad Urban. And in service tax, in division bench, we had got a favorable verdict in Rajiv Gandhi University. We showed the High Court that statutory bodies which do a function for as a part of their duty, you cannot call it a fee for consideration, which was accepted by the High Court based on these two decisions which I have quoted. The next limb, what we did was we said that if you look at 217 of the CGST Act, the MGST Act, which is same, you have trade, commerce, manufacture, supply includes trade, business includes trade, commerce, manufacture, everything is there. Vocation, but occupation is not there. If you look at the decision of the Supreme Court in TMA Pai's case, while interpreting Article 19 of the Constitution, Supreme Court said education is neither trade nor business. It is a occupation. Now we told the High Court, education is not a commercial activity at all. Cannot be in the course of furtherance of business. It is not either trade, nor commerce, nor profession, nor whatever it is. You cannot fit it in any clause in 217. 217I also, which talks of government, doesn't talk of statutory bodies. So it doesn't fit in the definition of business. If it doesn't fit into the definition of business, or it doesn't do its activities, it is collecting affiliation fee because of a statute, not because it wants to do any business. It is collecting several fees from the students, not because it is doing any business, but because the statute mandates it. So the business element having been missed out completely, the question of bringing it to tax doesn't arise. Both these contention that neither it is consideration nor its business was accepted by the government. What I would say is a beautiful decision. They have quoted so many judgments, many of which we gave, but the bench was so good. They went into their own decisions also. They did their own research also and got out a very nice decision. Second step was, apart from affiliation fee, which is the circular, if you see the Bombay High Court said the circular is, I'll come to that little later, it's contrary to the notification. We'll come to that. The circular talked of only affiliation fee. What about the rest of the fees that are collected? So for that, I had relied on 217, the first and second clauses, A and B. If you look carefully at the definition, activities incidental to a business can be brought to tax. I have a business, I carry on incidental activities, can be brought to tax. But if I have a charity, let us say I'm a charitable institution, incidentally I do business, you can't bring it to tax. Unless the business is an independent intention, it is not so. The university which renders a duty to the students at large in colleges by collecting prospectus fees, by collecting admission fees, by collecting convocation fees. These are incidental to education. It is not incidental to business. This was also accepted by the Bombay. They said all these fees will go out because they are not incidental to business. We had, in fact, relied on the decision of the Supreme Court in Sai Publication Fund, an old case, where Sai Baba Trust, sold books. And Supreme Court said the sale of books is incidental to charity. It is not incidental to business. And it cannot be brought to tax. So the entire income stream of the university was completely taken out on the ground that it's neither consideration nor is it business. Nor incidental activities to education can be brought to tax. I would think that this is one of the landmark cases which have come in GST. And I'm very fortunate that I was part of it. Then we came to the next step. If you look at the exemption notification, the first clause A, you see the circulars which were issued were on clause B of that exemption notification. Clause A says any service rendered by an university to its students, staff are exempt. I said we had made this plea. When you talk of the term educational institutions, it is defined in the notification. It doesn't say colleges. It says any institution imparting education, which is recognized by law for the time being in force. So we made two submissions then. We said one, without the affiliation and activities of the university, colleges cannot function. It's a core educational activity. One. And two, and this is very important, and this is what Bombay High Court accepted also readily. The student is a student of the university, not the college. He's a student of the university. When I say that I am, first question that we are asked is which university you come, which college you studied in. Studying in a college is different from being a student of the university. So we said the degree is awarded by the university to its students. Therefore, how will I award the degree unless I affiliate the college? So for that reason, we said it is an educational institution. It relied on several decisions, Gujarat High Court, Madras High Court. There's also other Supreme Court decision on the scope of the term education, educational institutions to show that university is also an educational institution. This was accepted by in the division bench in Karnataka High Court. And the Bombay High Court followed it by saying this exemption is very much available to universities because they are also an educational institution. So probably, if you look at this, and on this ground, they said the circular is restricting the notification. It relied on the Supreme Court decision in Sandur Micro and Tata Teleservices. So they said that on this ground also they fall within the exemption. You cannot take them. The circular goes beyond the exemption notification. Circular being contrary to exemption notification is bad in law. So if you look at it today, both the circulars have been declared with the Bombay High Court to be bad in. And this has to be followed across the country because they're ruling unless a contrary judgment of a particular high court is available. This judgment has to be followed as being what I feel an extremely elaborate and in-depth analysis of education and educational institutions, concept of consideration, concept of what is business, concept of what is incidental to business and incidental to other activities. This decision, I feel, is a landmark which I was lucky to have argued before the reputed Bombay High Court. What I will do is I will continue with this session and then I'll take the questions at the end so that they can accumulate the questions and then ask me accordingly. That is acceptable to all of you. Yes. Thank you. Now let me look at the next set of decisions. I will probably go across. I won't restrict it to one decision, maybe two, three decisions. The Rohan Corporation, which decision of the Karnataka High Court, which also I had very fortunate to argue. I would club that along with another decision, Asha, or on Solashia, which I had argued before the Karnataka High Court. Almost simultaneously, I argued these matters. And this has laid down some very far-reaching propositions as far as GST law is concerned. The first and foremost question that arises for us is whether this immovable property per se is covered under GST. I have been telling in several seminars, as you are all aware, that per se immovable property can never come within the clutches of GST law at all. So I took out the GST Council minutes and showed it to the High Court. How would the council had discussed that they wanted to introduce GST on immovable property transactions and then deferred that decision? One. Two is, I told the court, you have to look at it from that point of view before you decide what is goods and what is services. In goods is movable property, so it is left out of my immovable property goes out of goods. But there is a thinking among many professionals which I've heard where they say it is covered in services because anything other than goods is covered in services. So I said, if anything other than goods is covered in services, why is the GST Council discussing on immovable property? They need not discuss. Why have they deferred the decision? Why have they put in clause 5 sale of land and subject to so and so sale of building? Why have they done that? Then we traced it back to the decision of the Supreme Court in VKC Footsteps. If you look at the decision of the Supreme Court in VKC Footsteps, what they say is because of complex economic situation and considerations, alcoholic liquor for human consumption and stamp duty transactions were taken out of the purview of GST. This is the text in VKC Footsteps rendered by the Supreme Court. So we said there is a deliberately to ensure that revenues flow to the state. Alcoholic liquor for human consumption is kept out of GST. Second, stamp duty transactions are kept out. Why stamp duty means when we say stamp duty, substantial revenue flows from registration. And if you look at the real estate industry, if I were to you pay 7 or 8% as registration fees, another you pay another 5 or 12% as whatever your rate is as GST. Who will buy property? As it is, land prices are so high. That is why if you see the GST council discussions, I went back and showed they wanted to subsume the stamp duty into the GST. That was what was originally planned. Subsume the stamp duty into GST, not have two levies. When they couldn't come to an agreement, they left the stamp duty transactions out of the GST regime. States and center did not agree for GST on immovable property sales. And for good reasons, each one had their own reasons. States want their own revenues. Third, then the question came. I told the court, the question will come. Why have they included sale of land and sale of building in Schedule 3? Why did they put it there? I told the court, it is only by way of abundant caution. To ensure that sale of land and buildings, which collects most of the stamp duty, most of your stamp duty is collected in sale of land and buildings. Gifting, compulsory acquisitions are much less than sale. So for abundant caution, they put these two terms, which the Karnataka High Court accepted. So I said, let you look at it this way. In Asha's case, I said, you look at it this way. If I sell my property to the government without it acquiring, I will sell it. I may sell X property for 10 crores market value. To a third party, or to government, 10. I will come in schedule 3, I will be completely exempt from tax. I mean, it's not taxable, not exemption. It is not at all taxable. It's not supply only. Let us assume the same property is acquired by the government, compulsory acquisition for a metro project as in the Asha's case. Metro project. Because of government valuation, etc., they'll give only 7 crores. They won't give me 10 crores. Now you are saying that 7 crores will be subjected to tax. That is solation. On the one hand, I get less revenue. On the other hand, you say it is not covered in sale. It will become an Article 14 challenge. You can't subject me to a double whammy. So that is why sale of land, sale of building is ex abundanti cautela, only by way of abundant caution. The transaction has to be viewed akin to sale. When I argued this case, GIDC case was not there. Otherwise, it would have helped me. I had argued this much before. The order came very late. GIDC came much later, where Gujarat High Court also took the same view. They said that assignment of leasehold rights by an allotee is nothing but an immovable property transaction. And they beautifully brought out one concept which we have been discussing. I think I introduced this in CTC several years back. Profit up and transaction. Beautifully brought out in GIDC's case. I was very happy to see that discussion. Uh, Transaction, if you look at immovable property definition in General Clauses Act, Registration Act, Transfer of Property Act, read all of them together. One thing which comes out of this will be that land, building, benefits that arise out of land. What is this benefits that arise out of land is also considered as immovable property. Assignment of a leasehold right is a benefit which arises directly from the land. Just as Bombay High Court has held in Sahodai's case, that developmental rights arises from is a benefit which arises from land. If you look at the recent decision of Bombay High Court in, I think, Srinivas Realtors, what do they say? They say developmental right covered in 5B of the notification on reverse charge. Does it cover landowner developmental rights? It covers TDRs only. So, a landowner who enters into an arrangement with a builder on a JDA is not at all covered. This is the implication of that Bombay High Court judgment. But coming back to this Solatium case, I had said that compulsory acquisition of land is similar to sale. And therefore, a compulsory acquisition of land for metro projects by individuals, the solatium that is paid is a part of the compensation. Compensation is paid. How they pay it is this 100% compensation. The compensation is given, 100% of the compensation is given as solatium. Then we had relied on definition of what is solatium in Tarsem Singh's case, which followed another constitutional bench, to show that solatium is part of compensation. It is not a part of agreeing to an obligation. This is very important. Because the department wanted to tax solatium under agreeing to an obligation to refrain from an act. to tolerate an act. So we showed these Karnataka in Asha's case. Agreeing to an obligation means it should be an independent contract. There should be a service element in it. Solatium is for payment as a compensation. Part of the compensation is held with Supreme. It is actually a payment for not tolerating. I don't tolerate the acquisition. That is why solatium is given. It's compensation. Circular 178, which I relied on, I showed them how Circular 178 in its nature would cover toleration of an act. But when you don't tolerate the act, but you still you have to get rid of the property because government is acquiring it. Government has a right to acquire it. You get a compensation plus solation. Solation is part of this compensation. So that aspect in Asha's case, the Karnataka High Court agreed with, saying that it is neither covered as a service under agreeing to obligation. It is a straight and simple acquisition of immovable property for a compensation. Compensation for convenience is split into several categories, which includes value of land, solatium, etc., etc. None of these components can fall under goods or services because the intention to tax immovable property under both these heads are not present. Probably a very far reaching consequence this judgment will have because so many individuals across the country will benefit because of this judgment. And I was very happy that the High Court held it in this way. Coming to Rohan's case, there was the same principles, but in Rohan's case, it was slightly different in the sense. What was the transaction? The petitioner wants to buy a property from a liquidator. Liquidator of a company is getting rid of the property. The property is half built. It's incomplete. But he is selling it as his various. Liquidator wants to sell it as his various basis. He says, I want to get rid of this property. The problem with the question that is being asked, has the department filed an appeal? Let's sir, let's discuss it. Take some take some delight in small pleasures. Department will file appeal. Department will do this. Let them do it. Let me finish my narration. The reason why we as a country are always getting thrashed is because we are only worried about what another man will do. You are not worried about what you will do. Sorry to say this. So liquidator sells the property as it is. He gets rid of the property. Liquidator says, I am told incomplete buildings are liable to GST. So you have to pay the GST. So the petitioner is forced to pay the GST under protest he pays. He files a refund claim. Department analyzes, says, yes, there's no unjust enrichment, everything is perfect. But you look at entry 5 of Schedule 3, it says subject to 5B, sale of land and sale of buildings subject to entry 5. It's an incomplete building. Therefore, it falls in 5B. You have to pay a GST. There's nothing wrong with the GST payment. We will deny you the refund. If I go in appeal, I know that nothing is going to come out. So we file a writ petition directly on jurisdictional grounds. Please understand, many people ask this question, will writ petition be maintainable, this, that. There's something, if you please observe what the Bombay High Court has said in Goa University's case. Jurisdictional facts have to be determined by the High Court. If we question jurisdiction, when we question that the university is not at all in the taxable net, it's a question of jurisdiction. The jurisdictional fact has to be determined not by the adjudicating authority, by the High Court. Please see, since you're all, many are chartered accountants or experts in income tax, see the celebrated decision in Arun Kumar's case. Justice Thakkar will set out what is the meaning of jurisdictional facts beautifully. We use that case law to show the Bombay High Court, and same here also, saying that if the tax authority does not have a jurisdiction to touch immovable property transactions, and then what is the difference we showed? We said, based on L&T's decision and Munjal Manishbhai Bhatt's, L&T is by Supreme Court, Munjal Manishbhai Bhatt is Gujarat High Court. Contract for works contract or construction contract is considered a service from the date the contract is entered into. So if you see the Karnataka High Court, the other decision in the Parameshwarappa's case or whatever it is, but there is a contract to construct. If I enter into a contract to construct for you, then it will fall in 5B or it will fall as a works contract, as the case may. But in this case, the liquidator is selling it on as-is where-is basis. He doesn't have any wherewithal to construct and finish the building. He is simply getting rid of. And a huge stamp duty amount is paid. Because it's a sale of, as far as the registration authorities are concerned, it's a sale of immovable property. They don't care. So it's a sale. It's a sale deed. So we said that on the date of sale of this property, there is no contract to render construction services. Liquidator doesn't render any construction services to me. He gets rid of the property as it is. After which I may entrust to somebody to do construction services when I will pay GST, completion services. But at this moment, when the liquidator sells the incomplete building, it is a sale of immovable property per se. There is no contract today for rendering services. Therefore, you cannot bring it within the ambit of GST at all. That was the plea which we took before the Honorable. What I consider again it was really a landmark decision which will help all the assessees and sick, those who are under IBC, especially who are getting rid of their properties. The High Court accepted our contention and, in fact, listed out the paragraphs in L&T's case and Munjal Manish Bhai's Bhatt case and beautifully bought out proposition of works contract from Gannon Dunkerley's time and said you can have a works contract only from the date of agreement. The agreement says that construction services are to be rendered. Then GST is paid. But if the agreement doesn't talk of any of this, it is only for a sale of building per se, stamp duty is paid. Then the question of including it as a service when no service is being rendered at all is beyond the jurisdiction of the authorities. Once it is beyond the jurisdiction of the authorities, then writ courts can grant the refund. Therefore, in Rohan's case also, the writ court granted the refund with interest, ordered for granting of the refund with interest. Fallout of these two discussions will be that one, transactions of immovable property involving, in one of the paragraphs, I had argued, and that was accepted by the High Court. In one of the paragraphs, it comes rights in immovable property are different from usage to which the immovable property can be put. Rights will not be subjected to GST. Usage can be subjected to GST. The rent it out, you subject it to GST. That is usage of the property. But rights in immovable property, there is no taxation. Those rights are transferred through the registration laws. I have a leasehold right. I have a developmental right. All of these rights, when I transfer, that is not a subject matter of GST law. What is subject matter of GST law is only the usage of that property to which I rent it out. Now you may ask me what's the difference between lease and rent. You look at GIDC's case. GIDC's case is a good proposition where the allottee transfers his leasehold rights. What about the original allotment? There are exemptions which are available. 19-year you lease, this, that. But what if it doesn't fall within the text? GIDC gives certain land on lease to X. X is the allottee, so as to save the leasehold rights. He transfers to Y. He assigns it to Y, like this. He assigns these entire rights to GIDC's case is on the assignment by X to Y, not GIDC's allotment to X. So how can you bring this to tax? My humble opinion, this Rohan decision will help in these cases where the High Court said that rights in properties when they are transferred is not a subject matter of GST. It is a usage to which it can goes. So, let me put it this way. If you look at the lease allotment done by these government agencies like GIDC, MIDC, KIDB, all that across the country, there are two components. Transfer of leasehold rights, rent. Every agreement will have two components. Transfer of leasehold rights, which will be a huge amount, which is actually equivalent to the sale value. And rental, nominal rental. The transfer of leasehold rights is nothing but the sale value. And therefore, it attracts huge stamp duty. Whatever is the sale stamp duty, same thing you will have to pay. So therefore, there are decisions of the Madras High Court. Say this 90-year-old lease business, 99 is nothing but a sale. There's no difference. That is also set out in GIDC's case. So, in my humble view, the transfer of these leasehold rights is different from renting. You see, the difference was bought out actually beautifully in Panbari's case in income tax, Supreme Court, where they said transfer of leasehold rights is capital asset. It's a capital asset transaction. That is how lease is defined under Transfer of Property Act under Section 105. Transfer of leasehold rights is different from the rent which you receive from the lease. Transfer of leasehold rights means I, as an owner, I have a right to lease and I give it to you. If I lease it for 99 years, it is nothing but it is absolutely like a sale. The reason being, during my or your lifetime of if we live 99 years, I can use it. Therefore, the GIDC's case also that, as we are discussing, Rohan, forms a beautiful amalgam of cases where we have been able to, across the country, we have been able to succeed in telling the courts in Gujarat and Karnataka that immovable property, rights in immovable property, which as per the General Clauses Act is also recognized as immovable property. Benefits arising out of land like developmental rights, leasehold rights, have to be which come in the which come under the registration laws have to be considered as immovable property transactions. Do not fit within the jurisdiction of the GST law, and therefore the jurisdiction not being fitted, you cannot demand a tax from the persons for this purpose. Obviously, all these matters will go to this. I'm openly telling you whatever we are discussing today. I'll preempt what our friend had put the question. I will tell him and tell others. These decisions which we have discussed now, first is Goa University, which is a division bench decision. Decision in GIDC's case. Decision in Rohan Corporation's case. Decision in Asha's case. All of these are landmark decisions, and surely they will go up to Supreme Court. There's no doubt of that. What are we trying to do by this is to lay down the law in GST. We're trying to narrow the confines of the law. So that is why if I go back to Goa University, where I had taken another argument, just taking the balance sheet and profit and loss account and bringing everything to tax under GST is unacceptable. I relied on the decisions of the Supreme Court in Halima Zubair's case and a very earlier case. But the Bombay High Court accepted it. They said you cannot take the balance sheet and profit and loss account and simply put it to tax unless you can show that there is a supply of goods or services. You cannot bring every income to tax. That's a beautiful observation by the Bombay High Court in Goa. All of these decisions, be confident it will go to the Supreme Court. No doubt about it. Next decision, which I will discuss, of course, is another celebrated decision, the Kerala High Court in IMA's case, which, if you know, on mutuality concept, I have also expressed my view in these forums that the mutuality concept will continue to apply even after the introduction of 7(1)(a). To trace the history of mutuality straight from 1500s, 1600s, all those case laws which come in UK, US. What the court says is something akin to what our Supreme Court said in Kikabai Premchand's case, 24 ITR, very old case. Justice Patanjali Shastri says, you cannot do business with yourself. Beautifully put. You cannot do business with yourself. You cannot by yourself. You can't take, if you transfer money from your right pocket to your left pocket, doesn't mean income as a result. So mutuality concept is only that. For sake of convenience, you incorporate or you have an unincorporated association, club. Why you have clubs? Why you have associations? So that they will act as your agent. So what did the courts say? The House of Lords and so many other courts. What did they say? They said that you are dealing with yourself. One is principal, one is agent. When you're dealing with yourself, there's question of there being consideration doesn't arise. Again, we go back to that. So you are not different from the association. Unlike a company, which is a separate legal entity, you are not different from an association. Now, they extended that concept even to incorporated associations, where they said incorporated associations also, which do nothing but what the owners want. But also get this benefit. The Young Men's Association's case was referred to Calcutta Club, which among the many who argued, I was also there. We could convince the Supreme Court that even after introduction, see what they did was they introduced 366(29)(a) in the Constitution and called it deemed supply, which in our colloquial language, it's tax on purchase or sale of goods. In our language, we call it deemed supply. Well, tax was on sale of goods. Deemed supply of goods also came to sales tax. So if you look at it, sales tax covered sales, deemed sales, as per the Constitution. Even after that introduction, in Calcutta Club's case, the Supreme Court, a three-bench said, it may be so, but it should be for consideration. If you use the terminology for consideration, it means there should be two parties. Constitutionally, not through legislation. Constitutionally, when you use the terminology, there should be two parties. And in these member associations, there are no two parties. So even the concept of deemed sale cannot cover associations, even after the introduction of 366(29), because there are no two persons. Clear statement of law which interpreted the Constitution. When they introduced service tax under 90s, entry 97, there was no concept of deemed services at all. It was only service. That was also not mentioned in the constitution. They introduced 92C and never enforced it and deleted it in 2016. Net effect of this, net effect of this was that constitutionally associations and the members are considered as one, not as two persons. Now, when it came to when they lost Calcutta Club's case, that was in 2019, after GST was introduced. They realized that, oh my God, we have lost it in the Supreme Court. Now, even though there is a definition of business clubs association was there, in supply nothing was there. So they introduced 71AA. And they introduced it so badly that we have discussed this in the earlier seminars. So they said we have plugged Calcutta Club's case by introducing clauses 71AA and we have 270. We have introduced the clauses. This is enough to tax all clubs and associations. But IMA thought differently and challenged it in the High Court of Kerala. Very well, good challenge. Not only they introduced it in 2021, they made it retrospective. A single bench went into this challenge, upheld the provisions of 71AA and 2 bracket 17, but held it will be wrong to apply it retrospectively because it will put unjustified burden on the clubs and associations. So it will be prospective only. This is what the single judge held. So he upheld the constitutional validity, but applied it only prospectively, not retrospectively. IMA went to the division bench. Division bench beautifully brings out this concept. This is very important for us to realize also. IMA says the Kerala High Court division bench, of course, the judge who passed the order is a renowned senior advocate who has had extensive tax practice. So he knows taxation very well. He went into this concept and said that, look here, you have made legislative changes. Legislature has the power to make legislative change. No, everything accepted. Very good. Everything accepted. You wanted to plug the loophole, you've done legislative changes. Very good. First class. But you must understand the interpretation in Calcutta Club's case and the earlier interpretations which Supreme Court and Ranchi Club, everything which they have placed, is on the constitution, not on the legislation. My dear man, they have interpreted the constitution. They have not interpreted the legislation. They have said the constitution says you should have two people. What have you done to change the constitution? That is in short, that is the question. I want to put it in layman's language as easy as possible. Look here, man, if you wanted to do something, you should have changed the constitution. You're not done that. You've gone in and done all 71AA, this one, that one, but the Supreme Court, over a long period of time, has interpreted 366/29 constitutional entries to mean that there should be two persons. If you look at 246A, which introduced GST, goods and services tax, and the legislation which introduced it as also talks of consideration, which means two persons should be available. Constitutionally, there is no guideline on when the GST was introduced in 246A that there is a departure from the principle of mutuality. Is very important. Constitutionally, there has been no departure from the principle of mutuality by the legislature, by the constitutional amendments, even in 246A, don't show that the principle of mutuality has been departed from. So whatever legislative changes you have made is useless. To put it in layman's term, they have not used this terminology. I am putting it so that it's easy for us to follow. You should have changed the constitution first, then change the legislation. You only change the legislation. And therefore, the Kerala High Court allowed the appeal, held 71AA, and that provision of 217 relating to clubs as unconstitutional. Let me tell you, when one High Court holds it to be unconstitutional, it will apply throughout the country. Unless another High Court takes different view. Supposing Bombay High Court takes a different view from Kerala High Court, then in Bombay, the state of Maharashtra, and wherever Bombay High Court is there, Goa, etc., that law will hold good, not the Kerala High Court decision. But today you have only one decision of Kerala. It holds good across the country. So they also agreed with the single judge saying that even if it were to be held constitutional, it can be only prospective. It is hit by the doctrine of unfairness. Article 14. If you put it retrospective, the burden is huge. So keep this in mind. Retrospective amendments like Safari, which have been made, of course, I have shared my thoughts on Safari I think in the forthcoming journal of CTC itself, I think. How the Safari judgment has not actually been overridden in the way which we want. And we can still take the benefit of Safari judgment, even now. But the point is this. If you make a retrospective amendment, you have every power, legislative power to make it. There's nothing which can stop. No problem. You can do it. But it has to still meet the test of Article 14. It should not be unreasonable. Reasonableness of any law can be tested by the courts. If we can prove that the legislation by being retrospective becomes unreasonable because it puts an unjustified burden on the assessees or the owners, etc., then that legislation can be struck down. This is a very important principle. IMS case here also very important. If Safari puts I'm telling you, because I was there part of the Safari group and I heard the arguments of the government which said 5,000 crores are involved. For whom? It's a huge amount. It's a huge burden for the assessees. 5,000 crores, nothing for the government actually. You see that way, how they're collecting GST. Nothing. But for the individual assessees who have to pay several crores, it can be substantial. Lakhs substantial. So any assessee who's affected by a retrospective amendment can go to the court and challenge it on Article 14 saying it is unreasonable. You have the power to do it, but you have the power to do only That law which is reasonable, not which is unreasonable. Therefore, drawing a parallel from the IMA judgment, we can use it for Safari's challenge for retrospective amendments which have been made. One more decision which Naresh ji had told me to probably deal with. McLeod Russell's case, which we have discussed. If you see, the Guwahati High Court has taken a very good. The constitutional validity of 16(2)AA was challenged. They admitted the challenge. But 16(2)C, the Guwahati High Court has upheld the challenge. They have said, relying on Delhi High Court's judgment in Onquest's case, they have said, saying that your credit will be reversed because that man has not paid the taxes is unreasonable unless you are in collusion with each other. Supposing I am in collusion, let us say, with the CTC. For an example I'm giving, don't please extrapolate it. I am in collusion with them, then yes. But otherwise, let us say CTC has paid me the taxes, paid me the price of the services which I have rendered to them. I have not paid the taxes to the government. How can CTC be held responsible? How can you say CTC is wrong? They have done whatever they can do. That is on quest case, Delhi High Court, in the context of that. That is exactly what the Guwahati High Court also held, that 16(2)C has to be read down, and rightly so. In my view, 16(2)A, 16(2)C, all which puts a condition. You look at it from another angle. I'll give you another simple example. The same transaction, let us say, they recover the tax by asking CTC to reverse the credit. I have supplied services to CTC. CTC has paid me the amount with taxes. I have not remitted the taxes. You demand reversal of the credit from CTC. You also issue show cause notice to me for recovery of the tax because I have not paid. Your jurisdiction, CTC jurisdiction will issue for reversal of tax credit. My jurisdiction will issue for payment of tax. So who is getting unjustly enriched? You will collect tax from me. There you would have reversed the credit. I will not have communication with you. What happens? Tax is paid here, albeit lately, very late. Credit has been recovered. So two taxes have flown to the government on a transaction. That also is a factor which makes 16(2)A, 16(2)C, etc., unconstitutional. Because you are trying to recover the tax from the recipient without proceeding against the provider. And today it is rampant across the country. We have seen this happening across the country. So this is also very important and very good decision which I found. And I should thank Mr. Naresh ji for this. The last one which I thought I will just share my thoughts. I won't go very detailed into this is Bharti Airtel's decision where ITC on construction of telecommunication towers. If you see, telecommunication towers were held by the Supreme Court to be movable property, not immovable. In section 17, you have an explanation saying that immovable property does not plant and machinery does not include telecommunication. So the question that is asked, so do you lose the credit? No. You don't need to come into the definition of plant and machinery at all. You are covered by the definition of capital goods. You being movable property, telecommunication towers being movable property is capital goods. So therefore, credit is automatically available as capital goods credit. You don't need to get into this explanation to 17 at all. So the Supreme Court decision has helped all those people indirectly to take credit under the GST regime. With these thoughts, I leave it now for the question answers.
Thank you so much. Thank you, Raghu sir, for a very crisp and a wonderful deliberation. Sir,
Thank you, sir.
one of the question, the starting
Please,
point of
please.
Goa University, which you said, a very important aspect that you brought out is fees paid under a statute does not take the color of consideration. Now, this is going to have a larger ramification in a lot of other industries. One easily could be relatable is the municipal corporation fees that we pay for a developer. So this can be used even in those cases, sir. Any further thoughts on this?
Yes, trusts, charitable institutions, they're all out of this completely. I would go to the extent of saying, and I've said this also in your programs only, charitable institutions which rent out properties are out of this because on the question of incidental, not on consideration, but on incidental. The business is incidental to charity. You can't bring it within the tax net at all. I probably told this 5 or 6, 7 years back. But when we argue and it is accepted by a high court, we feel glad that it may help so many assessees. Of course, it will be subjected to review by the Supreme Court. I can tell you this. The Karnataka High Court judgment which we argued on affiliation and other fees RGUHS case, the department took it to the Supreme Court and the SLP has been dismissed. So RGUHS case, to that extent, it becomes the law. Even the SLPs, they say, are doctrine of merger doesn't arise. There's a lot of positive influence because of it. Yes, sir.
Sir, the second very important aspect that you touched upon was the L&T reference also, where the actual service starts after particularly the construction happens. Beyond the point, the construction happens. Now, in a developer case, typically, let's say a customer buys a unit till fourth slab is already constructed. So, can
Yes,
we apply those principles even for this sort of transactions?
that was exactly the case of. That was exactly the case in L&T, where they said if you have completed the property, say, let us assume you build a property, build, say, a project for 80 flats, let us. You're able to sell 70 flats. 10 are still being constructed, let us say. Where you're constructing them by yourself. You have completed 80%, at that time a buyer comes. There cannot be a GST on that 80%. You can have GST only on the 20%. This actually opens up a huge tax advantage for the real estate sector. You're
Sir,
absolutely, it's a very good question which you asked me. To the back of my mind. But I thought, let me entertain your questions, then I can expect this from Bombay.
sir, So one
True.
more aspect you highlighted that the rights of leasing, especially even by the first authority, technically falls out of the definition of supply. Section 7 uses the term supply, where they say it includes lease. Now, how do we interpret both these
That
aspects?
is why, that is why I said, if you look at 105 of the Transfer of Property Act, it splits the lease into rights of leasehold rights and enjoyment of the lease. First is what is called salami or premium. Second is the rent. Rent you can bring it to tax as a service, not the salami or premium. That is the difference.
Correct, sir. So similar interpretations even for the development rights which a landowner gives to the developer.
See, a developmental right is a benefit which arises out of land. See, as an owner, I have a bundle of rights. 100 rights I will have. Possessionary rights, transfer rights, transfer of limited things in the property, those rights. I have lots. One such right is the right to allow you to develop. I can develop it myself. I give it to you. That is development. If I don't have the land, developmental rights can never come. So it's a benefit which arises out of land, which is, sorry, which is prescribed as which is defined as immovable property under the Act. That is why a huge stamp duty is levied. It in itself is an immovable property. So you cannot make it a subject matter of GST is my argument. Now all these case laws one by one which were GIDC,
Correct.
Rohan, Asha, all this will help.
Absolutely.
For a moment, I'm not saying all this loss, because we have helped laid down, will become the law of the land. We have to wait and see. We are only trying to lay down the law which we think is right. Maybe another authority may say, Supreme Court, may say, no, 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 you are wrong, they say. May say, we don't know.
Correct. Sir, the Kerala High Court mutuality principle, which you highlighted, now
Yes.
a lot of people on a conservative footing might have paid GST on these transactions. How can we look at the possibility of refunds in those scenarios?
Refunds can be had if no, I refer to the judgment in Mafatlal Industries case. If a levy is struck down as unconstitutional, your right to refund starts. The statutory limitation under 54 will not apply.
Hmm.
From the date of judgment, you can apply. Whoever has borne the incidence of tax, either the club or association or the member, can apply for the refund. With this express understanding that all these matters will be carried to. But as of today, this is the law.
Correct.
This is the law. You have every right to apply for the refund.
Now, sir, as a fallout, lot of times what happens resale of units, either maybe by the landowner who gets a commensurate share in that redevelopment process, or there is a buyer who actually resells it. How do we look at from a business point of view? Can we argue that this is probably not in the course of furtherance of business?
See, for an individual, if an individual is selling, it can never be in the course of furtherance of business because that is not his objective. Unless you have, so let us say a company is selling and the company's objectives as per memorandum are to do business. It is in real estate, let us. Then it's different. But an individual who sells his house or property or whatever, it can never be in the course of furtherance of business. This is my humble opinion.
Sir, one aspect of jurisdiction, sir, which you touched upon for the writ petition to be entertained by a High Court. One issue which commonly people are facing is there are huge demands which have been raised in the GST law, and there is a mandatory
Yes.
pre-deposit requirement to go into appeal. Can this be challenged as a jurisdictional issue before
No,
a court?
no. The mandatory, in my opinion, mandatory pre-deposit is a statutory requirement. You can challenge it if it is unreasonable. The statute can be challenged if it's unreasonable. They ask you only 10%, and second appeal another 10%.
Hmm.
You can challenge the order saying it's a high pitched demand, but the statutory provision cannot be challenged saying it's unreasonable because they ask only 10 and 10.
Correct.
The only way you can do that is to challenge the order itself on grounds which are available for its jurisdiction. For example, it's violative of principles of natural justice, or jurisdictional facts are not involved,
Hmm.
or the jurisdiction itself is not there because it is an immovable property transaction, for example. Redevelopment, which you're saying, is nothing but an immovable property transaction.
Hmm.
On jurisdiction, you can challenge. It doesn't fall within the ambit of GST. Those are some of the grounds you can take.
Sir, one common issue which most of them are facing is this housing cooperative society. And I'm sure this IMA decision gives great relief to that. So, how is your thought on this being applicable to those?
I've always, consistently held that mutuality concept continues till constitutional amendments are made. You make constitutional amendment, we'll all bow down and follow. In the absence of constitutional amendment, we are sorry to tell you that we can't follow. You can have legislations, but our
CTC
humble
also,
opinion,
CTC also being an association of members.
I have got into problems telling this in the institute forum. Don't drag me into your into your controls. I've always held associations and members are one and the same. Mutuality will always apply. Whatever fees you collect, etc., is for cost of defraying whatever is your for the benefit of members. You're not doing it for your personal benefit only. I'll take some questions which have come.
Yes, sir. Yes, sir. You can.
Rajkamalji, BNM I surely argued, but please understand, it's an SLP where they kept all the questions of law open because they realized that retrospective amendments were made. See, BNM, the decision came before the retrospective amendments were made. And I will tell you one more thing, which I forgot to mention during to thank Rajkamalji. I was able to convince the Karnataka High Court that Schedule 2 is only a classification. It is not automatically leads to supply. Supply, you have to satisfy Section 7. If you don't satisfy Section 7, even if it is there in Schedule 2, doesn't mean automatically it's service or goods, or as the case. So BANM now is, in my opinion, to be restricted only to BANM facts. At that time, what the law was. The questions of law, Supreme Court itself, when they dismissed the SLP, said we are keeping these questions open. What is the definition? What is lease? What is for own occupation? All those questions are left open. So, in my view, I think we have to give a decent burial to the BANM case and go on with the GIDC case, which I feel is a very good, which I feel is a better laid down. Landowner entered to JDA with builder. Landowner also selling a share during construction. Can we say landowner is also in business and liable for? In my humble opinion, landowner can never be roped into GST unless you can point out that he's in business. Typically, I have one land which I enter into JDA. You can't say I'm in the business. For me, it is investment. For the real estate company, it is business. So, Mr. Subramanian is absolutely right when he says landowner can never be bought. It's on first principles. If I have to argue for a landowner, I will say I'm not in business. You can't bring me in GST. Builder pays various charges to BMC. Can we argue the same is faced under statute? Please argue, sir. We have discussed this already. You're absolutely right, Mr. Nitin. Whatever you pay as a statutory impost, my humble view, is not a consideration unless you can show that it is services rendered for consideration. How can each member apply for refund? They're not depositing tax with the government. Only paying tax forward charge can collect the refund. No, sir. See, person who collects the tax already, who has paid and collected it, cannot apply for refund because he is struck by the unjust enrichment clause. The person who has the incidence, that is the member who pays the tax, can surely apply for refund. Let us say members of the association, let them all apply for refund and get supported with a letter that the association has paid the tax and recovered it from the members. Matter ends. If developmental right is taken out of entry 5B, will construction activity become only works contract services? Very good question. In my view, let me put it this way. Well, this is what I told the Telangana High Court a week back. You cannot bring, see, there are two things. I do have some time, sir.
Yes, sir. Yes, sir.
Yes, sir.
Ah, let us say I enter into JDA with Mr. Kevalji. Kevalji's land I am going to build. We are sharing it in the ratio of 40-60. 60 to me, 40 to Kevalji. What is the consideration I get? Do I get anything from Kevalji? Nothing. My entire consideration flows from the 60% which I sell, on which GST is paid. What I do for KVLG is a condition of the contract. I build the flat and give 40%, I hand over to you. You cannot bring that to tax. And you can bring it to tax only under works contract entry. You can't bring it under construction services at all because the land is already owned by KVLG. Something can be bought to construction services. And this is thankful to Rajkamalji again because sometimes we forget what we argue. In Solatium case, or is it in Rowan's case, I think? One of these two. I brought out the difference between construction services and works contract. If you look at the L&T case in 2015, what does the Supreme Court say? Works contract is a separate species from construction. Construction is services simpliciter. Works contract will involve transfer of property in goods. So 5B entry is only for Mestri. You can't bring it to, if the goods are involved, it all has to be works contract. This was accepted by the High Court. You're absolutely right, Rajkamalji. Thank you for your question. Whether developer needs to pay GST on free area given to existing firms, this is what I'm saying. whatever free area that he gives is a cost which he incurs, which is inbuilt into the consideration which he gets from outsiders, on which he has paid GST. So Vasanta Green, which a tribunal decided in favor of the assessees, which is now pending in the Supreme Court, is the correct view. No GST is to be paid on all these redevelopment activities done to. Thank you, Naveen ji, for saying it's Rohan's case. Correct. And thank you. He has read it better than me, though I argued it. Thank you, Naveen ji. Any further questions you can ask me, sir?
Sir, I think you have addressed most of it and much, much beyond what we had actually asked. Sir, really thankful for the deliberation and precisely, sir, we had allotted 90 minutes and you have absolutely covered the everything into this 90 minutes aspect. I would now request Raj to formally give you a vote of
Two
thanks.
questions have come. Department is yet to file appeal in those cases,
Hmm.
and surely they will file. I am telling you this. If they don't file, I will be surprised. Corporate guarantee taxability, sir, you know very well. I've got to stay in the Karnataka High Court on this. My view is always that it is not taxable. That is my view.
Thank you, sir. Good evening, everyone. On behalf of the
Prerna ji has asked a question. Sir, if the argument is accepted that Schedule 2 is only for classification, then on under construction property, GST shall not be levied. Can we take this argument? Why not? Try it. Nothing wrong. Very good question. Wonderful question. Try it. Take the Rohan Shahs and see if you can use it for that. Yes, sir. I hope I have not missed anything. Thank you.
Sir, on behalf of the Chamber of Tax Consultants, the Indirect Tax Committee and all the participants, I would extend a heartfelt gratitude to Senior Advocate V. Raghuraman, sir. I think for delivering such an insightful and enriching session today on the important decisions under GST. Sir, your exceptional clarity in breaking down this complex judicial pronouncement, be it the Bombay High Court's judgment on Goa University, the Karnataka High
Raj, just hold. I think sir wants to come in.
Yes, yes.
I've seen some questions coming again. Same analogy can be applied to food prepared at restaurants before customer arrives. Madam Asha Lata, food I have clarified in CTC seminar itself will fall under services only. Can never come under sale of goods because of the definitions that are contained in Schedule 2. They want to classify it as services. Yes, sir. No, you please continue, sir.
I think
No.
this I think all this the way you have exceptionally broken down this all complex pronouncements, whether it be the Goa University's judgment of Bombay High Court, the Karnataka High Court's judgment on under construction property, or the Kerala High Court's decision on principle of mutuality, and various other decisions you have covered, sir. I think it was very enlightening, and your deep legal acumen and this experience of having you in the past so many sessions and of your experience of 3 decades is evident in every word which you said today, sir. Thank you for sharing your knowledge and expertise with all the members. And also special thanks to all the members and participants who have joined this session. Once again, thank you, Raghuraman sir, for your time, your wisdom, and very thankful for sparing a valuable time for CTC, and look forward to have you much more sessions during this centenary year of Chamber of Tax Consultants. Wishing everyone a great evening ahead. Thank you. Thank you so much.
Thank you so much. Thank you very much.
Thank you, Raghu sir. Thank you.
Thank you, Raghu, sir.
Thank you very much, sir.
Thank you so much. Thank you so much.
Shall we sign off now?
Yes, sir.